Welcome to the intersection of history and economics, where the choices we make today will determine the world you will live in tomorrow. Economist Richard Wolff is our guide to the lessons we can learn from the economic challenges looming in this special. Join us as we unmask the truth behind the numbers and reveal the stories that will define a generation. Good day and welcome, savvy investors and inquisitive minds. Today, we are taking a deep dive into a concern that confronts us all: potential economic collapse, as given a warning by world-famous economist Richard Wolff, which says, what could reshape world history? From geopolitical turmoil to the internal challenges stunning major economies, it is a journey to decode the intricacies and the possibility of a paradigm shift. So follow us on this enlightening journey by smashing that subscribe button. Have you ever considered how a country with over 700 military bases worldwide impacts your investment portfolio? Is America's global extravagance an expensive distraction, or does it signify something deeper, a changing global order that could alter everything? So stay tuned as we explore the rise and fall of the US empire, the global power dynamics at play, and why this is important for you and your investments. So let us start with some hard questions. What does it mean to have 700 to 800 military bases worldwide? No one does it better than the US, with the military in what feels like every corner of the globe: Africa, Asia, Europe, and the Middle East. However, is it just about keeping the world free of danger, or is it more about something much bigger? Global dominance. Consider that. American warships in the South China Sea, a short distance from Taiwan. However, here is the kicker. Is Taiwan the point? No. It is about symbolism. It is about projecting power. It is not just that China is concerned about Taiwan, but they are also looking at America's military power and saying, what are they after? Moreover, you know what? They are not wrong. Now you may be asking, what does this have to do with my portfolio? That is where things get interesting. When global superpowers clash, economies respond. Moreover, these moves reverberate across the stock market, from commodities to tech stocks, whether it is defense spending, geopolitical tensions, or trade disruptions. Now let us get great with Europe. You would think that the war in Ukraine would unite the West, no? However, no. And there is huge resistance, especially in Europe. From anti-capitalists to pro-capitalists, the war, in the eyes of many Europeans, is a colossal blunder. A drain on resources, financing a war that isn't theirs to fight. As always, let us not mince words. The British working class has declined for decades. The latest acts? Slashing social programs and billions for an unwinnable war they always opposed. Now, citizens are learning what happens when politicians ignore their needs. Britain, France, and Germany. These countries are in a state of crisis, and this is not merely political grandstanding, this is an actual economic transition. Why should you care as an investor? Simple. Markets do not like political destabilization. It rattles investor confidence, particularly when a unipolar world begins to yield to a greater surplus of competing powers. So if you are not paying attention to how countries respond to wars, sanctions, and tussles over leadership in the world, you could be missing important signals in the market. Let us rewind a bit. Remember Brexit? The UK believed it could divorce its European roots and mend its ills. But guess what? They were wrong. The post-Brexit experience was even worse for the British working class. Their living standards suffered as they were sold a lie: that leaving the EU would somehow solve everyone's woes. Spoiler alert, it did not. And here is the thing. This thinking is not just something contained to the UK. Moreover, we are seeing the ugly rise in anti-immigrant rhetoric, nationalist movements, and the promises that everything will be better if we just close the borders across the globe from the US to Europe. However, these ideas are naive, immature, and harmful to the future of the global economy. Here is why this matters for you, the investor. Such decisions send countries down the path of economic isolation, trade disruptions, and social unrest. Moreover, if you are not prepared, your investments will be ravaged. A polarized world is a dangerous world, and you want to put yourself in a position where you are lowering that risk.
Now let us zoom in on France and Germany. The recent elections in these countries have signaled a massive rejection of the political status quo. In France, both leftist and right-wing nationalist movements are on the rise, as are the rise of quasi-fascist parties in Germany. What is happening here? What is happening? Europe's conventional political parties are losing their hold. The French government has just seen its party defeated by a coalition of left-wing forces. Sarah Wagen, a lifelong Marxist in Germany who ran second, suggested that the political map is changing in dramatic ways. So as an investor, what is the big deal and why should you care? Because political disarray and a lack of agreement can destroy economies. When elections produce polarization and fragmented governance, markets typically respond by slowing down and investor confidence declines. A conflicted Europe is bad news for anyone with money on the line. Let us shift gears. The US is no different. As the world's largest military power, we must ask, is this sustainable? Military superiority has always been connected to economic power. However, what do you do when the empire begins to fray? Look at the United States. Trillion-dollar debt, hollowed-out industries, warring internal factions. The truth is, the US empire is in decline. It does not take a historian to see that. Study the economic and political indicators. We have become too fixated on sustaining our hegemony via military might, and too ignorant of our citizens' needs. Moreover, this is now manifesting through rising populism and increasing frustration at home. Here is an investment lesson with big implications. When an empire collapses, so do its bonds, and global markets reorganize. The decline of the US empire is a rise in multipolarity where the power of other nations is increasing, said Schwo. Investors like you need to be prepared for such tides. Get ready for a world where US power is not as omnipresent as once. Let us talk about China. In the last decade, 800 million people in China have escaped poverty. Allow that to sink in for a moment. China's economy is expanding quickly, and it is not just pursuing military power like the US, it is also investing in infrastructure, education, and global partnerships. China is constructing roads, bridges, and schools from Africa to Asia. They are laying the foundation for long-term economic growth. Here in the West, we are still mired in wars and building walls, and China is looking at economic cooperation. And you know what? It is working. The United Nations even endorsed them. This is not purely about charity, but about establishing economic stability and unleashing new trade routes. First, the global wealth divide. Look at Nigeria, a nation of 220 million people and a GDP of $500 billion. Contrast that with the US, 350 million people, $23 trillion GDP. The divide is astronomical, and this is just one illustration of the widening disparity between the global North and South. What does this mean for you? The inequality of wealth is growing more and more untenable. Citizens in poorer countries see the inequities, and they are getting mad. They are fleeing their countries for a better life, as my family did when we left Europe for the US. However, this cannot go on indefinitely. The system is broken. This presents many risks and opportunities for investors. You can bet that companies and governments prioritizing closing the gap in social responsibility, economic quality, and value creation will be the future economic engines of growth. Sustainability is the game's name, and you will be left behind if you are not factoring your investments into these values. So what is the takeaway from all this? The US empire is in its twilight as the world transitions to a more multipolar landscape. The ascent of China, political turmoil in Europe, and increasing inequality are all signs of a new economic order. This means becoming less of a buyer and more of a flexible investor adapted to these changing effects. Pay attention to emerging markets, especially on the African continent and in Asia. Those regions are likely in the next several decades to dominate global growth. Keep up with the new order of global power and pay into it. To every empire that rose and fell, yours does not have to when it comes to your finances. If you know these global shifts and get ahead of the curve, you can thrive regardless of where things go. Stay tuned for more tips on navigating the ever-evolving financial landscape. So let us prepare for what is next together.